Hello everyone, welcome to Financial Strategy Consultants. Today we are going to study about CFA Level 3 curriculum reading number 30, which is on estate plan. So this session is about its LOS 4 and 5, where we will understand what is beneficial, gift or bequest, and what will be the taxes, what will be the formula for taxation on gift and taxation on bequest, and how a gift is beneficial for against bequest. So let's start. First, as we have already understand, two primary sources of wealth transfer are gift and bequest. Gift is what you transfer during your life when you are alive, and bequest is when you transfer it after your death. So the case here is that some countries has a very high inheritance taxes on bequest, and therefore most of the people would be willing to transfer their wealth when they are alive to save their estate from the taxation, high taxation. So there are also some countries which gives you free gift limit, like for example in Africa you can give 100,000 rand, South African rand, per year, without tax, without paying any tax. That means it's tax free. So if you have let's say 500,000 and you want to give it to your you want to give it to someone after your death, it would be better if you give it 100,000 per year for the next 5 years, and in that way you can save a lot of taxes. The way we look at it is that we look at relative value. That means what will be the future value of the asset if you give it as a gift, and what will be the future value of asset if it is a bequest. The future value will be calculated at the time of your death. So we have to take an assumption that you will live for a particular year. For example, let's say 20 years, when n will be 20. So that's one thing that we have to understand. This is the formula. Here you can understand that RG or RE are the returns on that particular asset. So RG and RE could be same if the source of return is same for that particular asset, but there could be a chance like you gave the asset to a recipient and he converted it in some other way. So for example, you gave him a land and he sell the land and use the money for something else. So the rate of return would be different in those cases. Okay, similarly TIG is investment tax, tax on investment, so tax on the returns you are getting on those assets. So it could be same if the source of return is same, but if it is different source, then there could be different taxes as per the government rules. And TE is estate tax. So this is the formula which you have to remember. Now there could be a case like, for example, if South Africa we take, after 100,000 rand they have to pay the tax. Similarly, there would be some countries which have no tax-free gift. At even 1,000 rupees, at even $1,000, at even $500, you have to pay a tax. So in such a case, we have to include another factor which is called tax on gift. So you can see in the numerator, the formula has 1 minus TG as well in this case. Here also we will calculate the RV. If we find that it is greater than 1, it means that gift is better. If it is less than 1, it means bequest is better. And the third case, so the second case was when the receiver is paying the taxes. In the third case, if donor is paying the taxes, in the same formula, since he is paying the taxes now, there will be a benefit he will get when he has to pay the estate tax, because that time the amount would be less, and that's why that factor is included here as TG into TE. And that's why you will see that when a donor pays the tax, the relative value is higher than the when a receiver pays the tax. So these three formulas are very important in this LOS. Now we will look at an example. This is example of a French resident who is 50-year-old Philip Zachary. He want to transfer his asset, a 20,000 euro gift per year, to his brother Etienne, his cousin. Philip has 60% tax rate because he is a very high wealthy person, whereas his brother's Etienne has only 48% tax rate because he is in lower income person. Okay, so the Philip is expected to live for next 20 years. He is considering gifting the assets for next 20 years. Okay, okay, so that's one thing which we have to understand. So the three questions are: one is we have to calculate what will be the value of his gift which he will give in the year one, 20,000. What will be the value after 20 years? That means a simple compounding. The second case here is what will be the relative value of that gift as compared to the bequest if he would have given this 20,000 in the future. And the third case is what if he want to give some more gift, as some more gift means over 20,000, and that gift, since it is crossing the limit, that will be taxable. So that is what we have to understand. Tax on gift and tax on estate is also very important. Tax on estate is 60%, tax on gift is 48%, because of Zachary is giving it. Okay. Zachary, because 18 is going to pay it. So these are some things which you have to understand. Now in the first question is, as I said, it is a simple compounding. You can see 20,000 is compounded for 20 years, and 20% here is the tax rate which is on the investment asset, investment return. The second question is on relative value. You can clearly see, if you want, you can use this formula and try to calculate it by yourself. It is a tax free formula. You will see that 3.45 is the relative value. That means 3.45 times benefit you are going to get if you give gift instead of bequest. And the solution 3 is about taxable gift, where 60% is the tax which is on the estate, but there is only 30% tax which is going to be paid by ATN as a gift. Okay, so that in such a case you can see that the RV is 2.42. So we can clearly understand that it is beneficial if we give gift instead of giving a bequest. So that's what we have to understand. There is another example. So now we will look at one example where we will see gift or bequest, what is better. So here there are three cases. One is that if you give a tax, it is a tax-free gift. In other case, it is a taxable case. In taxable gift also, it could be either the donor pays the tax or the receiver pays the tax. So all three formula is already there in the reading and in the slides which we have already shown, but here we will look at an example to understand it in a better manner. So the question which is already in your screen, you can see that there is a person called Mary Jane who has 20 years of life expectancy. Her return, pre-tax return is 8%, and her tax on investment is 35%. Similarly, for the receiver also, investment return, pre-tax return is 8%, and tax on investment is 35%. Their gift tax is 25%, and estate tax is 40%. That means when you give a bequest, you have to pay 40%. When there is a gift, you have to pay 25%. This is a very important number. If this changes, there could be a change in the complete situation, which we will understand later. So here you can see in the example that we have first scenario tax-free. In tax-free, this is the formula. So when we put the numbers in the tax-free situation, you can calculate it on your financial calculator also. We can see that the answer will come as 1.67. That means that future value of gift is more than future value of bequest. It means it is beneficial to give a gift rather than a bequest. Now we will look into the scenario 2. In scenario 2, you can see that there is a additional term called 1 minus TG multiplied. That means that if a receiver is paying tax, that 25% tax will also be removed from the future value of gift, and that's why it will be a lower number as compared to before. But how much lower? When you calculate, you will find it to be 1.25. Still, the future value of gift is more than future value of bequest. That means it is better to give gift today. Now we will look at the situation 3, where the tax is paid by donor. Will it be higher or lower than this is an important factor. In this third situation, we can see tax is paid by the donor, and tax is paid by the donor, the taxes will be less than what it was in the case of taxes paid by the receiver. So here this TGT is added back, that's why the value would be higher, and that's why the relative value is also going to be higher. So the answer would come 1.42. So here you can clearly understand from this point
So in all three cases, we can see that the tax paid by a donor or receiver, or if the gift is tax free, in all the cases, it is beneficial to give gift today as compared to giving it after death. But there is one important aspect to it. If you give gift today, you won't have a control on that gift. So in future, if you feel that you have given it to the wrong person, you don't want to give it to your son or daughter, or you want to give some charity rather than giving it as a gift to your family, so that control no longer exists. And that's why it is another aspect which you have to consider apart from the financial number, that whether you want to give it to your descendant or not prior to that death. So that's an important thing. Another important factor is tax on gift and tax on estate. If this number changes, there could be a possibility that the taxes on gift would be higher than the taxes on estate. And in such a case, at least in one of the three cases, it would be the scene that the number would be less than one, and in such a case you would be more interested in keeping your estate with you, keeping your assets with you, and passing it after your death. So that's all.
So this is all friends in this video. Please like, subscribe and share this channel, and comment and let me know how you feel about this video and what more topics you are interested in to see on my channel. Thanks a lot.